The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 19th. Marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody out there had a great weekend, fantastic weekend. We are winding down summertime here already, August the 19th. How about that? Back to school for pretty much everybody, I think, in the state of Florida. Well, let's go look at one of our tools. This is the tool I call, what is failure? You know, if success is the steady progress towards your own personal goals, then what is failure? Something to think about. Question. Is failure working on a project that ends with poor results? Of course not. Is failure launching a new product that fails miserably in the marketplace? Of course not. Is failure doing the best you can with your kids and then having them disappoint you? Of course not. Folks, there is no failure in pouring your heart, your soul, your energy into something that doesn't work. Rather, failure is not trying at all. If success is a steady progress towards your own personal goals, then failure is simply no progress at all. What a great thought. What a great way to be able to start your kids off from, beginning a brand new year of learning and education and school. I suggest you go ahead and you share what failure and success is with them. Success and failure, they're always linked together. Success is doing, failure is not doing. It is just simply that simple out there. Let me give you the formula for disaster. Could, should, and don't. That is a formula for disaster. Let me give you the formula for fortune. Could, should, and will. Of course, I say with a dose of massive action out there. A man says, I'll climb the mountain. People say, it's too high, it's too difficult, it's too rocky, it's never been done before. A man says, hey, it's my mountain, and I'm not coming back until I've climbed it. That, folks, is power. Studies show that the greatest achievers aren't those who fail the least. The greatest achievers are those who are the least frightened of failure. Remember, without failure, there can be no success. That is what failure is. Let's go check out the failures inside the marketplace right now. We've got the Dow. It's pretty flat out here. Dow is up. Dow futures up 2 points. S&P futures totally flat. NASDAQ futures up 4 1/4. King dollar's up 3 pennies at 81.32. You've got gold trading off $1. Silver down 21 cents. Light sweet crude off 60 cents. A quick peek around the globe out here. Over in Germany, the DAX is off 23 points. FTSE down 33. That FTSE's off about 0.5%. Over in Asia last night, a little bit of a mixed bag. The Nikkei up 108 points. That was about 0.8%. Hang Seng off 0.25%, down 54 points. And the Shanghai up 17. Our call-in number is 877-927-6648. If you give us a call, we can take a look at your stock chart. Let's start off by taking a look at our friend, the ES Mini, S&P Futures. We're going to take a look at that 120-minute chart. we had been showing, we're still showing if you're watching us on Tiger TV. You can see that yellow box. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can catch the archive of this show on Channel 9 and the live stream right now by going to the homepage of TFNN.com. On the right-hand side, click on that box, upper right-hand corner. You'll see 3 smartphone devices. Click on that. The show will stream live. You'll see this little sideways consolidation move that the ES Mini had been in. That went back from July the 17th, finally broke out of it on August the 15th. Nearly 30 days out there, 28, 29 days out there. Sideways consolidation move. Now, what's important about that consolidation move? Well, number one, it was a range of about 23 points from bottom to the top. There was an attempt to break out of that trading range. That happened back on August the 1st. Price came back into it not too, 5-6 days later. In fact, it was on August the 6th at about 11:30. Once you break back inside a consolidation area, what price will typically do is go back down and test the bottom. That's exactly what happened, only in this case here, we had price just slice right through it at 9:30 in the morning. That was last week on August the 15th. When you break out of a consolidation range, it says you're going to go ahead and you're going to make a move equal to or greater than the size of the consolidation. Well, the target, because the bottom of the range out here, in essence, was 1671, with it being a 23-point consolidation range, I gave a target of 1650. Right now, the ES Mini, by the way, it's trading at 1650.25 out there. So what have we seen here? We've seen a move equal to, well, really just slightly greater. I guess it got down to 1648.50 as we were coming into the show here this morning at 9 o'clock. So you can say it's been just slightly below that. But in essence, the 23-point consolidation range has completed. Now, on the 120-minute chart that we're looking at, the market is not oversold just yet. It's down towards the oversold area, but it's not oversold, so it can go ahead and push lower. Remember, on these consolidation patterns, it is equal to or greater than, that is your expected outcome. Well, we fit in the equal to area. Now, let's go switch over and take a look at a daily chart, see what's going on with regard to the daily ES Mini out here. What this is going to show us is, yes, price has broken back into the lower part of the range. What we mean by that is on May 22nd out here, we're looking at a key reversal session, a bearish engulfing candle as well. That happens when a market is stretched. The market was absolutely stretched. That happens when price trades in the opposite direction of where price was coming from. Well, it was coming from the bottom, so price was moving higher. In this case here, we had a nice red candle. And then thirdly, we had the high and low of the prior session exceeded. Well, that was, it most certainly did that. Key reversal session, bearish engulfing, that set up a resistance really at the top of that May 22nd level, 1685.75. Same thing on the index chart, same thing on the SPY chart out there if you take a look at it. What we can see here on the ES Mini daily chart is although we've broken back down into it, and one could say that's a failure on price and certainly a failure on volume, what it hasn't done yet and what it's trying to do is really trying to get back in the lower part of the range, which means a close below the May 22nd low. In the case of the ES Mini, that's 1646.50. Right now you're trading at 1650.25. What we can also see out here, the trend is still up. The trend, if we take a look at just simply coming off of and what I mean by the trend is up, the trend line, the uptrend line hasn't been broken. So the trend is still up here. If we take a look at the daily chart, that's just simply coming off of the November 16th low out there. That's at 1340.25. Your next touch points being that December 31st, that January, December 28th low and the December 31st low out there. You can see that as price was moving down back in June of just a few months ago, June 24th, price held that level. So even if the ES Mini gets below, which I suspect it's going to, by the way, it's below the 50-day exponential moving average. People are taking notice of that. It's not yet below that May 22nd level, but if it does get below 1646.50, what is going to be the real test of this trend is whether or not it can actually go ahead and break through this. Now, the Dow, on the other hand, I believe has broken that trend line. We'll go take a look at that. But if we just stay here on the ES Mini, the S&P 500, which is a better indicator for the overall market versus 30 stocks, right? 500 versus 30. Yeah, we're looking at the futures contract. But if we go take a look at, so you can see the trend in place. You can also see that price has not gotten to the oversold territory. That means it has more room to run to the downside. When price gets down to the lower portion of that momentum indicator, that relative strength index out here, that's when you start to see bottoms. If you don't believe me, just put it on your chart out here. The last time we saw a bottom was back here in November of 2012. What was the relative strength indicator doing? It was in the oversold territory. How about the time before that? Well, the time before that, that's easy. That was June in 2012. Saw a nice little market bounce there. Actually, got into oversold territory back in the May of 2012 level. So you want to be paying attention to that. Now, if we're really in a bear market, price will keep pushing and keep pushing and keep pushing down into that oversold territory, and there won't be a whole lot of let-up on it. So we got to pay attention to the trend line, short-term trend line, no question about it, because we're coming off of November 16th. Well, let's go ahead and expand that trend line. Let's go take a look at a weekly chart. Let's go from a daily to a weekly chart. Here's the weekly chart. The weekly chart shows the price channels. The weekly chart shows the two A to B equals CD up patterns that completed between 1702 and 1709. What we saw here in the ES Mini was a price move up to the 1705 level. So it's completed 2A to B equals CD patterns, the one coming off of the March 09 lows out there. You can see the black lines, the diagonal lines on my chart here. That is the rising price channel. Clearly, we're quite a ways away from even getting down towards the bottom of that. In fact, we're only really towards the midpoint of this rising price channel. So on an intermediate term time frame, so which we'll use as the weekly time frame out here, this trend is still very much to the upside out there. And then if we go take a look at the monthly chart, on the monthly chart you'll see as well, the monthly chart shows you, we're up over the highs back in 2000 and 2007 out here. The top of that is about 1586. Right now we're trading at 1650, still inside the price channel, inside the monthly as well. So you can see, and quite frankly, on the monthly chart, of course, we are only at the 19th. That's not a reversal candle, by the way. That's just simply a red candle. If in fact we were to see, now, and this is important to be paying attention to, as we come into the end of August, if there's a close below 1600.25, you'll have a bearish engulfing. You'll have really the second bearish engulfing candle inside the ES Mini. This one here that took place the month of June here, really more of a dark cloud cover because it didn't get all the way down to the bottom. The actual open of that May 31st candle was at 1593.75, and the close was 1596.25 on June 30th. So very close to being a bearish engulfing, but a dark cloud cover. Nonetheless, of course, that was wiped out entirely last month out here. But we want to be paying attention to these bearish engulfing candles out here, if in fact one should form, or any bearish reversal candle that's out here, because when we take a look at the highs, if we go back into 2000, September 30th, 2000, that was a dark cloud cover candle as well, and then we saw some momentum to the downside. If we take a look at the highs that were formed out here back in 2007, you got a bearish engulfing, you got an evening star formation candle out here on the monthly chart. Monthly is going to give us a longer-term signal, so it's going to be very important to watch how we close out the month, whether it's the index, whether it is the futures contract out here. But right now, you can see the trend is still to the upside, starting to turn down. Just looks out, it just depends on what time frame it is that you're looking at. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No change really here in the futures market. So now let's go take a look at the, we do use the S&P 500 as a, as a decent gauge for the market, better than a decent gauge, a good gauge for the market. Let's go take a look at the week link out here. The week link is the Dow. So we're going to take a look at the Dow futures. If you're watching us on Tiger TV, we're going to start off and we're going to take a look at the monthly chart. So we'll start with the longer-term chart and then go dive down into the shorter-term chart. So on the monthly chart, we're looking at the 1-to-1 A to B equals CD pattern that completed out here. The price projection on that, 1 to 1.272, I should say. Price projection completed on that at 15,481. Your A point is going to be your March 09 low. On the futures contract for the Dow, that was 64.60. That would be your A point. Your B point was the swing point that was formed on April the 30th. That price level there was 11,206. Makes a very shallow retracement down into the lows of July in 2010, out at 95.06. That shallow retracement telling us that it was going to do more than a 1-to-1 A to B equals CD. Gets us up to 15,481. The 1 to 1.272, we actually got up, or the Dow got up to 15,523 during the month of May out there, May of 2013. Now, what we did see on the following month on the monthly chart out here was this little dark cloud cover candle as well. You can see that it stopped just shy of the open of May 31st out there. That open was 14,783. The actual close on June was at 14,813 out there. So a reversal candle. No follow-through, obviously, during the month of July, and same consideration. Right now, we do have a dark cloud cover because it's more than 50% of the way into the bar here from July out here. Why did I lose that? Come on back here. Give me a second here. I think I got it there we go. Okay, so right now the candle, if the month were to end right now, this would be considered a dark cloud cover candle. What we're going to watch for is whether or not it can engulf. We're going to watch for a couple things. Number one, it's not inside, the Dow's not inside the lower part of its range. The lower part of its range, even though we pay attention to that May area, the May 22nd high, which in this case here is going to be here on the monthly chart, is going to be the high up there at 15,523. So sure, it's back inside the lower part of that range, but the real range that we need to be watching inside the Dow is really the lower part, or the October 31st, 2007 level. That's 14,267. Nice evening star formation, reversal pattern out here back in 2007. So that's going to be the area, 14,267, that we're going to find out whether or not that's going to act as support as price moves down there. Should price move down there, and if it does hold, then that says, okay, now you've got all you've done is just come back and tested an area where, in fact, you broke out from. So that is inside the Dow futures on the monthly. So, yes, on the daily, we're seeing a pullback here. We know that it's weak. But on the monthly, not so fast. In fact, not so fast until you get down to 14,267. If we go take a look at the weekly chart out here, we'll change that to a weekly chart. On the weekly chart, you can see the completion of 2A to B equals C to up patterns. Then on the weekly chart, what we can also tell, we can take a look at where the areas of support and resistance. We know that there's resistance now up here at the top. You had this little evening star formation candle out here. That was the 3-candle formation the week of May 17th, May 24th, as well as May 31st out there. That, in essence, held as resistance. So we now know that we've got some resistance right up here. In fact, you even had this bear sash candle that took place last week, August the 9th. 2 weeks ago. So we know that there's some significant resistance up here. Now the question is, well, where is support? Well, on the weekly chart, support that's going to be first tested is going to be this little bearish engulfing candle from April 19th. It's going to be the top of that, right around 14,797. It's really going to be the high of the prior week out there, which is 14,823. So 14,823 is going to be an important area to see if there's a test. That's obviously going to get us inside that June 28th candle, which is really June 24th. So it's going to be inside the Dow that's going to give us the big piece of information. Of course, remember that big piece of information that we really have to be paying attention to is really on the monthly chart out here. We know the S&P is back inside the May 22nd area. We know that the Dow is back inside the May 22nd area. But in the Dow, we want to be paying attention to that top, October 31st, 2007, 14,267 is the number. If we take a look at the daily chart out here, the daily chart shows that the Dow now is back below the rising price channel. It has not been. It was only below there for one day, and that was on December 28th out there, and then we saw it move up. It's down there right now. What does that set up? It sets up if the Dow tests this area here, and it tested it on Friday, continues to try to get inside the rising price channel and can't, that'll send up our move down to the June 24th area where we know that we've got volume down there, and that should be tested inside the Dow. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We got the Dow down 32 points. Trade out at 15,049. S&P off 3. Trade at 1652. Composite is flat. Russell 2000 down $1.70. Google's up $4. Apple up $4 and change as well. Microsoft down 20 ticks. Intel up 27 cents. Cisco up nickel. Apple leading the charge. The upside up 4.56. Tesla Motor just behind them. They're revving their engines. They're up $2.80. LinkedIn up $2. You got Supernus Pharmaceuticals, SUPN. That's having a nice morning. That's up 21%. Let me see if I can see any news behind the move out here. I do not see any news behind the move. We'll take a look at that equity. Ross Stores, ROST, that's up about 2%. That's up $1 and change. To the downside here, Leading the charge to the downside, Cobalt International, CIE, is a ticker symbol. They're off 13% this morning. Zillow, Z, the ticker symbol, they're off about $4. I believe they have another offering out there, so they're floating some more shares up at these levels here. GTX Inc. and GTXI off 63%. Holy cow. That's tanking. You've got Trulia, TRLA, that's off about 5% this morning. Icky Bank, IBN is N as in Nancy. That's down 8%. Apache Corp, APA, off 2%. Again, our call number 877-927-6648. Let's peek in on Apple first. So Apple now getting up to the area where I had first really targeted, where it should run into some resistance. We'll see if, in fact, that happens. That was the breakdown here from January the 24th. January 23rd is what it's trading into. That had 30 million shares. The breakdown inside Apple took place with 52 million shares to the downside on January 24th out there. The completion of a 1 to 2, A to B equals C. The up is 511.17. The top of the bar on January 23rd, and I suspect that'll be tested, 514.01. We'll see if, in fact, Apple runs into any resistance up there. There was also another little gap down that took place on January 11th. It really took place on January 14th. It had gapped down from the January 11th candle, but that only had about 26 million shares out there. So we'll see if Apple is able to break through that area. It is in the extreme overbought territory. But in the case of Apple, they can keep that thing in that extreme overbought territory for quite some time. Last time that was really up there for any length of period of time was back in January of 2012, and they ran that all the way up to the highs in April of 2012. That got up to 639. When it got into the overbought territory was in January, and that was at the 425 level. So they were able to hold that one up there for quite a period of time. We'll see what happens this time around inside of Apple. Let's go check out some of these other stocks out here, specifically Google. Let's take a look at Google. It's trading down into that hammer candle. The support level inside Google is going to be the low of that hammer candle, June 6th, and that's at 847.22. So price is back into that candle, 2.5 million shares. As price came down there, 1.8 million shares on August 15th. Nope, that's not enough to bust it down. August 16th out there, that says 523,000 shares. Let me update my system here. Is that really right? 523,000? No. There we go. Thank you. I knew that couldn't be right. 1.6 million shares. Still not enough to bust down that hammer candle, 2.5 million shares out there. So showing that it does not have enough volume to push through the lows. Now, it's not at the lows. 847.22 is the low. So far, what we have seen is a low of 856.54 out there. So testing that volume bar, testing that hammer, that volume bar, meaning the swing point of June 6th out there, but not enough to bust through it. Right now today, you've got a little bit of a bullish engulfing candle forming out here, but we got a lot of time left inside the trading session because we're only 8 minutes in. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you?
Okay. Let me get here.
I'm sorry, I couldn't hear you.
What's your gut feeling on where the S&P will be going with the full moon coming tomorrow? And there's a turn date. Good question. I think. Go ahead. Yeah, there's an Elliott wave turn date tomorrow.
Okay. I don't trade the Elliott wave patterns out there. I've got I've read through. I don't know about you, Lou, but then I consider myself to be. Well, look, I have the passion. Always want to learn other systems out there, and I've spent a lot of time reading through some of the Elliott wave material. I mean, I bought a book within the past couple of weeks and spent some time going on it, and I mean all kinds of charts, and I just get confused as all heck. Trying to understand, what's really going on there. So I can't. Unfortunately, all I can tell you is when I take a look at all that Elliott wave stuff, it's confusing to me. But and so if it's got a turn date, it's got a turn date. I don't know. I don't know what to really tell you about that. What I do know is that if we take a look at the ES-Mini as we started off, because you were specifically calling about the S&P 500, that we've seen that price projection, that original 23-point move down, that target of 1650. So I know that we're down near an area where we could see a bit of a bounce. And so that's what I am looking for. to me, that is a bounce to sell, not a bounce to go long. Now, the longer-term charts, as I covered in the intro here, there's not been any breakdowns out there. There may be. I suspect that what we do see inside the S&P specifically is the potential of going back and at least testing that 1576 area is one possibility. That's so long as the S&P stays below the May 22nd high, which is 1687.18, and low there is 1648.86. If it breaks through 1648.86, then to me it really will be back inside the lower part of the range. And then I say that the first test is moving back towards that June 24th area, which is somewhere between 1560 and 1588. And that's what my instincts tell me right now is where the S&P wants to get down to. Ideally, from the bullish side, it gets down and it really tests that 1576 area again, because 1576 was the breakout. If we take a look at the, see if I can do it on the, no, maybe on the monthly chart out here of the S&P 500. If you take a look at it, the 1576 is nothing more than coming back and testing the October 2007 high. And that's what took place back in June, just a couple of months ago, was a move down to 1560.33. It rejected that area and moved higher. So, I'm paying attention to that May 22nd swing point. I know that on the ES Mini, when you complete a pattern, when you complete a consolidation pattern, you can take a look at, you can easily get a bounce from there. And the next pattern is set up. And for me, the next pattern hasn't set up on the intraday charts at all at the moment. So, I don't know that helps you, but that's really what I'm looking at in the market.
Okay, that does help.
And I would say this: if you have traded the Elliott Wave pattern and you've got you got a handle around it, and you know what your expectancy is, which means you're comfortable enough with the that it produces positive results, then you should take whatever trade because that's your system. You should stay within your system. If you're picking up a new system out there just because somebody's got something marked as a turn date, I think you really have to understand what that might mean out there.
Gotcha.
Okay. Yep. Hey, you bet. Thanks so much for calling. All right, now the Dow is off about 5 points out here. S&P is basically flat. If we take a look at some of the things here, let's go take a look at what's going on inside the commodity sector. Let's go see what's going on with Goldilocks and silver out here. You've got gold down about $1 right now. Potential for a reversal candle here today. If we take a look at Friday's action, closing out at 1375. It does still have a confirmed A to B equals CD up to take it into the 1440 area. That would be just the 1-to-1 A to B equals CD. Gold is not overbought at this on the daily chart. That's what we're looking at as a daily chart out here. So it's got a confirmed pattern now. Where silver had been the weak link out here, silver has been nothing but strength in the marketplace, especially if we take a look at A to B equals CD patterns. It is about to complete a 1-to-2 A to B equals CD. And that's just simply coming off of a 0.68 retracement that was done back on August the 7th. But you can see, coming off of that C point, it has been nothing more than a space shuttle trip. I mean, it has been due north out here. So, bearish engulfing candle, the first bearish candle could form today. That would require a close below 22.93 out there. If you don't get that, 23.88 is still game out here. That's your 1-to-2. A to B equals CD. If we start taking a look at retracement levels now, retracement levels, let's see here. Give me a moment to get rid of one of the areas I've got in here. No, I'm sorry. That is the retracement level that we wanted. That's really coming off of the consolidation high going back to October of 2012. So the dead cat bounce from the highs, and what the highs I'm referring to are about $35.44 back on October 1st, 2012, to the lows that were put in all the way back here on June 28th. The 0.382 retracement is at 24.78. So where silver could easily target itself without any kind of reversal candle is somewhere between the 23.86 to the 24.78 area before it starts to run out of gas. And then the gas that it could be running into, or the real overhead resistance, is that green squiggly line. That's the 200-period exponential moving average. That right now is priced out at $25. So it does, without a reversal signal, it looks to me like silver wants to make a run to the $25 area. Then we'll see what it can do as it deals with that 200 period, that 200-day in this case here, exponential moving average, which the last time that silver was above that level for any significant time would have been, for any significant time, I'd say you'd have to go back to the November 2012 time frame. So that's going to be an important area for it, in fact, to tackle out there. If we take a look at light sweet crude out here, light sweet crude right now trading out at 107.03. You know, it's got this 14-point consolidation range that it broke out to, which would take a big spike up to the 114 level. It has just been consolidating, though, so let's take a look at this. Really, what we've seen with light sweet crude is a consolidation pattern for the month of July, basically, from July 5th forward. So let's take a look at that. Let's go measure that, because I haven't done this, so let's just go see what this provides us with. And we've been, in essence, it's been consolidating between the 103 area to the 109 area. Well, what's that, 6 points? So 6 points on top of 109 takes us to 115. And this has a projection of 114 because it broke a one-year consolidation move going to the one-year consolidation move. So it broke through that area. So far, it has only made a 0.382 retracement coming off of its last swing point low, which was June 24th, all the way to the high that was put in here on July 19th. And as much as I'd like to take a short position inside light sweet crude, and I'd like to take a short position for a couple of reasons. Number one, if you take a look at the commitment of traders data, which I like to do every weekend out there, the commitment of traders data, just like in the case of gold and silver, and it takes a while because, you see, those are big ships out there. Those are big boats. Those are big boys. That is a lot of petro. That is a lot of dollars out there. What those commercial traders are saying out there is they are putting their money on the net short side of light sweet crude. Now, they were net. They were taking their long positions inside gold for a long time because they can afford to take the pain, unlike you and I. We've got to time this thing just right out here. Even this morning, I'm taking a look at that, knowing that the big boys are taking net short positions, also knowing that we've got this 14-point consolidation move that has not completed, knowing that it's still just been consolidating here and somewhat struggling to make a move. Maybe it's some type of punch through in over in the Middle East. I don't know what it is, but my gut says, and Lou had called and asked for a gut check out here, you know, until it breaks the 0.382 level, until it breaks the 102 area, just be patient. Know that the big guys are looking for light sweet crude to really pull back. So maybe what we get, maybe we're fortunate to get a little punch move up to the 114, 115 level, and that is where you start to take on the short positions. That would give us an opportunity to really sell into strength, knowing that the big guys got our back behind us, and they, too, are looking for short positions inside the light sweet crude complex out here. So that right now is probably the biggest trade that I am watching that I'm not in at the moment. One of the trades that I am in, and this was a trade that gave away on the show here as we took a look at that key reversal day inside natural gas. Right now you got natural gas. That most certainly is up off of the bottom. It's trading out at 347. Out here, so that has much more room to run. That was also, we were in a condition where it had completed an A to B equals CD, the 1 to 2, just like we're taking a look at it in silver. So it was nice and stretched. We had a key reversal session. We had a bullish engulfing candle. I mean, you had basically everything. And while we were on the air on August the 9th, I went ahead and gave away a trade out there. It was inside the UNG, was a trade that we had set up out there. That looks like a good trade as well. If we take a look at bonds here, you want to take a look at this bond action, you want to take a look at consolidation patterns. Well, if we take a look at the 30-year continuous contract for bonds out here, the 30-year Treasury, what we'll see is we'll see that bonds have broken through the bottom of a consolidation. This is a consolidation. This was a support area that takes us back into October of 2011, March of 2012. That area really held back here in June of 2013, and now that area has been tested and has acted as resistance. Boy, that sets up bonds moving down to about the 115 level out here. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 5. S&P is down 30 cents right now. I'm going to go back here to the 30-year continuous contract, 30-year Treasury, I should say, continuous contract. So if you're watching us on Tiger TV, the upper section I went ahead and painted in. It's a consolidation pattern that the 30-year Treasury has been in since August 8th, 2011. we're talking about a 2-year time frame. Today's what, August the 19th. So a 2-year consolidation pattern, just like we were taking a look at inside of the 120-minute chart on the ES Mini. And you can see here, now when you break a consolidation level, which is what the, when I was taking a look at light sweet crude, that was also traveling in a consolidation level. Now, in the case of bonds have actually done what light sweet crude hasn't. When you break a consolidation area, you will like to see price come back and test it and confirm that the breakout or breakdown in this case here is real. And so you got a 2-year consolidation. Imagine all the energy that's been revved up here. Well, in the case of bonds here, if we take a look at the 30-year Treasury, what you're using for your consolidation level, because very clearly you can see as price had broken up as price was moving up back in August of 2011, came back down and tested on September the 1st, really created the, if you will, the first anchor point of the low of that consolidation area. 135 is what we'll just simply call it. And price had moved up, came back down and tested the bottom of that consolidation area back in October of 2011. Moved back up, moved sideways, the consolidated here. I'm sure if we go measure this consolidation area, that's probably the move lower as it broke down here. Came down and tested a low back in March of 2012. So it really set up a nice anchor point for the bottom of that consolidation area. The top of the consolidation area, I would say that really formed coming back into June of 2012, into the area of July of 2012, and then again here back in November of 2012. So that really set up the nice top, and we have a nice bottom area where you've got 3 tests of a region. Then what took place here is we actually had, bonds had a break of that area back on June 24th, when our markets had made a set of swing point lows that should be tested here. They don't have to be tested this week, but they should be tested. I'm not telling you when they're going to be tested, just simply that they should be tested. Well, bonds broke through that area. They came back and they tested it, walked back inside here up until the July 5th time frame. We saw price move back down, came back up, and was tested trying to get back inside there, moved back down, so a little bit of a consolidation here. Remember, we've been paying attention to that July 5th candle since that candle was formed out here with regard to taking a long or a short position inside the 30-year Treasury. And then what we most recently had happen here on August the 12th was a test of the bottom of that consolidation level. So that thing has been tested now 3 times, and it can't hold. It can't get back inside there. That's what sets up the move equal to, now it doesn't happen overnight, but that's what sets up the move equal to or greater than that consolidation area. And you can see that move takes you all the way down in the 117 area, takes you all the way back into the swing points of February of 2011 and April of 2011 as well. So it looks like for the longer term, again, it's a daily chart that we're looking at, that is where bonds want to head to. So let me make sure that I'm clear about this, because when I open up the show, we're taking a look at different time frames. I'm short the indexes right now. The McClellan oscillator, that's pointing lower. The summation index, that's pointing lower. They are pointing to a point in time where we should see some type of bounce. That is a bounce to sell, not necessarily a bounce to get in. You need to have quick fingers if you're going to try to play a counter-trend rally here. The only way for the bulls to take charge of this market, well, they can't do it today. They would need net advancing issue of about 4,259, which makes it impossible to do one day today. Folks, stay tuned. The Money Masters Show is up next. It is Marvelous Monday. Have a terrific day. I look forward to seeing you soon. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.